Welcome to the Explainer. So if you've been keeping an eye on the charts lately, you probably know things are getting quite interesting with Cellcom Israel Ltd, trading under the ticker CELJF. Today, we're going to dive deep into a long-term price chart analysis to break down exactly what the technicals are telling us right now. Okay, let's dive into this. The massive question on the table today is Cellcom Israel actually gearing up for a major price recovery? When we look closely at the source analysis of the long-term price chart, there is a very visible, overarching upward movement that is really starting to command attention. The data definitely suggests the stock is on its way to moving higher, but to really grasp how it might get there and, the obstacles standing in its way, we need to map out the specific technical levels that are guiding this journey. First things first, the analysis points out a really important defining characteristic of CELJF. It behaves very much like a slow-moving stock. So what does that actually mean for us? Well, it means that instead of pulling your hair out trying to perfectly time the market or stressing over every tiny minute-by-minute fluctuation, you should simply focus purely on the overall trend. Zoom out, look at the broader trajectory, and let the long-term trend be your guide, rather than stressing over precise timing. Section 1. The current trading range. Now, what's really interesting about this slide is that before we can talk about the future, we have to anchor ourselves to the present. Notice the immediate box the stock is currently stuck inside. It's almost like a room in a house. We have our floor, a solid support base situated right at the 10.24 mark, and we have our ceiling, a resistance level currently sitting around 14.4. The stock is essentially just bouncing around inside this specific highlighted section right now. It's a pretty broad range, but mathematically, it's very clearly defined. But hey, what happens if that floor gives out? The technical analysis goes a step further here and identifies 8.6 as the absolute critical stop-loss level within this current range. Think of this as your ultimate immediate safety net. If the stock dips below that initial support of 10.24, this 8.6 level is the hard line drawn in the sand for risk management. And I want to share a direct quote, really a strict warning from the source analysis right here. What is active right now is only this part. Look, it is incredibly tempting to glance at a chart, see an upward trend, and immediately start dreaming about those massive numbers way up at the top. But the material is very clear. You must focus solely on the reality of this current trading range. Until the stock proves it actually has the strength to break out of this box, anticipating those higher numbers is just getting way ahead of yourself. Moving right along to Section 2, mapping the upside breakouts. Think of these upcoming target levels as a sequence of locked doors. You simply cannot open the third door until you've successfully unlocked the first two. Step 1 is the absolute prerequisite. The stock must shatter that 14.4 resistance ceiling we just talked about. So the absolute crucial point here is that if, and literally only if, that breakout happens, then Step 2 becomes active. That targets the 19.5, 20, and 25 zones sequentially. Finally, if the momentum powerfully continues, Step 3 is your stretch target, pushing all the way up to 37 or 38. But remember, none of those higher numbers matter at all until 14.4 is shattered. And what about those sky-high numbers beyond that? Well, getting up to that 37 or 38 level is definitely viewed as a major stretch goal. The analysis clarifies that pushing beyond 37 would require waiting for an entirely separate, massive new breakout event to occur. That's a whole different conversation for a completely different day. For now, 37 to 38 is the absolute cap of this current sequential roadmap. All right, Section 3, volatility and downside risks. Now, as enthusiastic as we might be about those upside targets, we have to stay perfectly grounded in the data. A huge factor in this chart's behavior is where it actually trades. CELJF is listed on the OTC market, or the over-the-counter market. As defined in the source material, this specific trading environment is characterized by extreme volatility. Because it's an OTC stock, the source explicitly warns that sudden upward movements can happen fast, but they are inherently risky because they might simply not hold. So we're looking at a pretty stark contrast here. On one side, we have the potential for those rapid, exciting upside swings we just mapped out. But those are met with a very clear warning from the analysis, a potential lack of sustainability. Even if the stock swings higher, there's absolutely no guarantee it stays there. You've got to be mentally prepared for the reality that these spikes might be short-lived. Because of that exact volatility, the analyst provides some strict downside warnings that are honestly just as important as the upside targets. The first major drop-dead hazard number to watch is 10. Impartially speaking, the analysis states quite plainly that if the stock price drops below this level of 10, the broader downside trend may very well resume once again. And if 10 breaks, things get even more precarious. The absolute bottom hazard zone highlighted in the source is 6. Dropping below 10, or especially 6, is the undeniable danger zone. This just reinforces the severe downside risk that exists right underneath this current price recovery attempt. If those levels give way, the whole recovery narrative we've been discussing pretty much gets thrown out the window. And this brilliantly illustrates everything we've just covered. Here is your clean, screenshot-worthy cheat sheet summarizing the technical roadmap. On one side, we have our bullish triggers, breaking 14.4 to activate targets from 19.5 up to 25, and potentially stretching to 37 or 38. On the flip side are bearish triggers, the 8.6 stop loss, and those severe downside warnings if the stock drops below 10 or 6. This perfectly and impartially summarizes exactly what the chart is telling us, setting the boundaries no matter which direction the stock ultimately decides to go. Which leaves us with the ultimate question. Does Cellcom Israel have the sustained momentum required to actually break through that stubborn 14.4 ceiling? The roadmap is clear, the levels are set, and the risks are firmly defined. Now, it's simply a matter of watching the trend unfold. Thank you so much for learning with me today on this explainer, and I'll catch you on the next one.